Hello viewers and welcome to the channel. My name is Shannon Rivkin. Date is the 18th of March 2022. The video this week with e-commerce share prices at or near pre-pandemic levels, is the sector undervalued? You look, a timely video, probably outdated by 1 or 2 days considering we've seen some pretty big jumps following the Fed meeting earlier this week, which led to a little bit of a rally in tech names and mostly, the beaten down names in tech, and certainly e-commerce names kind of at the top of the list as far as the how big the sell-off has been. In Australia, we have a few kind of exciting e-commerce companies, all growing really quickly, but all facing certainly some investor skepticism in the short term, and in some cases some near-term headwinds as well at an operational level. Share prices of Kogan, Temple & Webster, Adore Beauty, Redbubble and Satire. Adore Beauty and Satire listing only in 2020, taking advantage of the very strong e-commerce market at that point. Only to, of course, disappoint investors quite significantly since then. And as you can see as well, the share prices of at least some, such as Kogan, at or below even pre-pandemic prices. And I think this is the most important thing to consider now. I've talked about on this channel at length the impact that long-term interest rates are going to have on high growth businesses. Many of these e-commerce businesses obviously fall into that category as they continue to invest near-term profits into further growth and taking more market share. The name of the game in tech, in this low interest rate environment, has all been about future profits, but revenue growth in the short term. And to some degree, I've said in that environment that any business that's turning a profit is probably not doing it right and should be reinvesting every spare dollar they have, raising the capital that they need through higher share prices, and issuing new shares, but grow, build market share, grow those revenues as much as possible until that critical mass has been achieved, and then profits can be a future consideration. Anyway, with bond yields now back to 2019 levels, and amazingly, it's hard to remember that how low interest rates were before COVID hit. That to consider we're actually ahead of that now, which is a big explanation on why some of these share prices have fallen so hard. But this is, I think, the important thing here: the market cap to revenue multiples of all of these names, and this is where I think the opportunity has come. Many people argued that COVID has brought forward many trends that already had significant tailwinds. There's no doubt that e-commerce is one of those. Australia in particular has lagged other parts of the world, for example the US, as far as e-commerce spend, and we do expect over time that that will catch up. But I think the overall e-commerce market will grow and grow and grow. So I don't think the pandemic has done anything except make that opportunity for these companies even greater than what it was. And yet we're seeing these companies at or even below previous valuation lows. In the early days of COVID, March 2020 here, good example here is Temple & Webster, which is a name I'm a big fan of. Went down to about 2 times revenue at its kind of low point, but was ahead of that. And I actually think that this number's a little bit wrong. I think it was closer to 3.5, 4 times at one point revenue, and now, and this is just before the recent fall as well, got as low as 1.5. And apologise that on the right side here is the multiple for Satire, which traded at higher multiples, whereas the left-hand axis is for all the other ones. So Temple & Webster, a name that has effectively tripled its revenues since COVID hit, but only trading about 50% higher, trading at valuation lows. And this is a business I really like in that it's almost a capital light retail business, in that to some degree, I think it's 85% of their product is effectively on consignment. So they don't have the same inventory woes that a company like Kogan has. They haven't faced the same mistakes that a company like Kogan has as far as buying aging inventory. And yet it's being priced for a concerning future, because this is what happens in these sort of sell-offs. It's everything gets sold off together, and this is where the opportunity comes. So I do think that while we may not be at the bottom, although perhaps that Fed meeting this week may prove to be a bottom, the fact that we'll buy at significant valuation lows, while the outlook for many of these names remains very exciting, I think will ultimately prove to be a good buying opportunity. But I think if you're going to buy, you're going to have to do it with a strong stomach, because volatility should be expected still, and who knows where the bottom will be. But I think in 5 years you look back and say that buying something like Temple & Webster at 1.5 times revenue would have been a brilliant opportunity and at a really attractive valuation. Anyway, that's it for the video this week. Thanks for tuning in, and I will be back with a video next week.